What does it look like when a company makes so much money, so consistently, that Wall Street analysts just run out of superlatives? Spoiler, it looks exactly like TSMC right now. Taiwan Semiconductor Manufacturing Company, TSMC for short, just posted a projected net profit of roughly $17.1 billion for Q1 2026. That is a 50% jump compared to the same quarter last year. 50% in 1 year. And here's the part that really matters. This is not a fluke quarter, not a one-time windfall. This is TSMC's 4th consecutive record quarter. 4 in a row. As you can see on screen, we are talking about a net profit of $17.1 billion. A 50% year-on-year surge. Built almost entirely on the back of one thing. AI chip demand that the industry itself is calling insatiable. Now, TSMC is not a brand you see on a shop shelf. It is what is called a contract chip maker, meaning it does not design chips, it manufactures them for the companies that do. Apple, Nvidia, Qualcomm. If it powers your phone, your laptop, or an AI data center somewhere, odds are TSMC made it. And the chip everyone is scrambling for right now is TSMC's 3nm chip. To put that in perspective, a nanometer is 1/1000th of a meter. These chips are so small and so powerful that your current smartphone processor looks like a relic by comparison. Every major AI system you have heard of, ChatGPT servers, Apple Intelligence, you name it, runs on chips that only TSMC can manufacture at this scale. That monopoly on cutting-edge production is exactly why their revenue grew 35% year-on-year this quarter, beating every single analyst forecast on Wall Street. TSMC's total market value now sits at approximately $1.6 trillion, nearly double that of Samsung Electronics, and its shares in Taipei are already up 28% just this year. So TSMC is not just winning its own race, it is lapping everyone else on the track. But here is the question you should actually be asking: what does any of this have to do with you? Stick around, because in the next module, we are getting into the ripple effects hitting Indian businesses and investors. And trust me, it is closer to home than you think. So a chip giant in Taiwan breaks records. Cool. But you're in Mumbai or Bengaluru thinking, okay, what does any of this actually have to do with me? Turns out, quite a lot. Here's how the money flows. When AI chip demand explodes, it means companies everywhere are building AI products, fast. And those companies need someone to actually deploy those tools, integrate them, migrate their systems, run the whole digital transformation circus. That someone? Indian IT. TCS, Infosys, Wipro, HCL Tech. These are the firms global businesses call when they need to make AI real inside their operations. So surging chip demand is essentially a direct pipeline of new contracts flowing into India's IT sector. Watch this trend line on screen. It's only pointing one way. For investors, that rising global AI sentiment also tends to pull in foreign portfolio investors. Large international funds, who increase their bets on Indian tech stocks, which can push share prices higher. But here's the part people skip. TSMC stock is already up 28% this year. When valuations run that hot, profit-taking is never far behind. If global investors start cashing out, Indian IT stocks, which tend to move in sync with global tech mood, could feel that correction too. So the honest takeaway? If you're a business owner or a tech freelancer, global AI spending is your tailwind. Ride it. If you're an investor, the opportunity is real, but don't chase the hype with your eyes closed. Now let's zoom out. Because the numbers are impressive, sure, but the real story here is structural. And it's one of the best business analogies you'll hear all year. Think of the AI boom as a modern-day gold rush. Every company on the planet. Startups, trillion-dollar giants, your neighbor's SaaS side hustle, is scrambling to mine gold by building AI products. But TSMC is the one selling the shovels. It doesn't care who strikes gold. As long as everyone is digging, TSMC wins. That's the whole game right there. And that's exactly why you're seeing record profits quarter after quarter. Because TSMC manufactures the essential chips that every single AI product in the world depends on. No chips, no AI. Full stop. Now look at who's locked into this relationship: Nvidia and Apple. Their entire product roadmaps, their next generation GPUs, their iPhone chips. All of it runs through TSMC's 3nm supply chain. That gives TSMC extraordinary pricing power. These aren't casual customers. They're captive ones. And here's where it gets interesting. There's a real vulnerability hiding under all this dominance. TSMC's production depends on critical raw materials like helium and neon, significant portions of which come from geopolitically sensitive regions. Think of it like a city whose entire water supply runs through a single pipeline passing through a war zone. Everything's fine. Until it isn't. Any disruption there cascades instantly into slower chip production, delayed product launches, and tighter AI infrastructure globally. Which means it affects your business too, whether you realize it or not. Here's the bottom line for Indian entrepreneurs and professionals. TSMC's dominance is essentially a health meter for the entire global AI economy. AI isn't a future trend you can afford to wait and watch on. It's the present infrastructure. The gold rush is already on. The businesses learning to use these tools right now, while the global investment wave is still building, are the ones who'll be standing tall when the next wave of disruption hits. So the only real question left is, are you digging? Follow us for more updates like this. Thanks for watching. And don't forget to follow us on YouTube, Instagram, and X.